Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall, a CPA with Dominion. We are a specialty tax and accounting firm specialized working for wealth management practices. And on today's episode, I have a very special guest with me, Kent Keister. He is the founder of Reliant Compliance, launched in 2020 to provide tailored, common sense compliance solutions to RIAs. I like the emphasis on common sense across the U.S. with over 20 years in financial services compliance. Kent has served as a Senior RIA Consultant, CCO, Director of Compliance, and more, working with SEC and State-Registered RIAs, hybrids, broker-dealers, and dual registrants. So thanks for coming on today, Kent.
Of course, thanks for having me.
I feel like every time I have, a new client come in or we have different issues or things go around, I always do the whole caveat of, this is what we can do from the tax perspective, but, just run it by compliance because that's a whole different kettle of fish than the IRS. So I always like to ask, when it comes to common misconceptions that you see firms have around compliance, like what are common questions that you get that are maybe like out of left field or just, common that seem to just be things that people don't really have a good grasp on when they come to you?
Besides everything, I'll try. It's interesting because we get a lot of, half of my job is answering questions, right? I wish I could say we had a lot of common ones, but there are so many great questions that we get asked, even if they feel like they're out of left field. I just like answering questions because it also gives me a window of like what perspective they're coming from, of why they're asking what they're asking. But we get asked if we have a soul or if we're just heartless individuals that are trying to build their business. Sometimes.
Those are the 11 p.m. on Friday texts, right?
Not necessarily. But as a former examiner, I can tell you we used to get some very interesting comments and questions. But don't you have anything better to do? But no, we plenty of those kind of questions. No, I think what I really like doing is building relationships with my clients. And I think part of that is getting them comfortable enough to ask questions, because we do get a lot of high level questions like, does this rule apply to me? Why do I have to do this? Or actually the most common question might be, we're doing this, is that okay?
Yeah.
So that comes up quite a bit. But a lot of people think it's a yes and no all the time, right? So it's interesting to kind of get in the weeds. I'm not a lawyer on purpose, and I think there's a lot of consultants that are not lawyers. There's a lot of great consultants that are lawyers. But the lawyerly answer of it depends is kind of like what always comes out. But I think that's what keeps things interesting for us, is that we get to solve different puzzles every day for different clients. And we may even provide the exact same service to multiple clients, but we provide it in such a different way because of the experience that financial advisor has, what their registration is, what their staffing is like, what their client base is like, what what services they deliver and how that impacts their compliance. So it's kind of all over the place, but we definitely get some weird ones. I will have to put them on there, or we say, hey, that's not really a compliance question.
It's like you should go get a doctor's appointment. Right. So I guess, one of the common, are there common things that you see people have compliance issues with that they don't realize it until it kind of comes to your desk? Or do you feel like advisors tend to have a pretty good sense of where the line is when it comes to the compliance issues?
I think it's pretty well split. I think what I really like about working with advisors are, most of the time, and I don't even mean most, like vast majority of the time, financial advisors want to do the right thing, especially in the RIA space where I work currently and where I have had the most time and I enjoy the most. You have a fiduciary duty to your clients, and almost every client I have that's an RIA says, hey, just tell me what the guardrails are. Like, I want to do right by my clients. I'm not trying to do anything bad. I'm not trying to, pull the wool over anyone's eyes. So we get that a lot where, they're trying to do the right thing. But then obviously when the rubber meets the road, some are way better at it than others, or they don't really see the compliance, perspective of what they're doing or what the risk would be to even themselves, let alone to a client if there's a conflict or something like that. But it's interesting. We actually, I really like working with the clients that don't know the specifics, but they know that something is off. Usually it more comes in the form of neglect. So we get people that say, oh, we've been meaning to update our compliance manual, or we've reviewed our documents and we know they probably need to be refreshed, right? Or so they kind of already know something is off. Some of those, and again, until we start digging into it, we don't know. So, I mean, there's times where it's always really nice when I can validate someone's feelings in a positive way. So we have people that say, oh, my compliance is a mess, I really need your help. And I go, actually, it's not that bad. Like, you're really not that far off, which is great. Unfortunately, I always have to be the bearer of bad news, to almost every client at some point. But then there's other ones that I feel like I get worried when they're more oblivious, right? When they're like, we are completely buttoned up, this is perfect. And then it only takes me about 5 minutes to go, let's double check some of this.
Yeah, those are more challenging because they're not expecting you to tell them like where the dog died, and and then at the same point, I'm sure it's a similar thing where you're like, oh, I don't know if the sensibility is going to kick in for this person to know that they need to reach out, oh, they don't know where the line is. I get a lot of, I've been seeing a lot more activity with this of people wanting to go independent and launch their own RIAs. And so for people who are in that process of going independent, when does it make sense for them to say, like, have a first conversation with someone like you, or, for them to start when they're weighing the options of what they're going to do? So like a lot of them, they'll be like at a wirehouse, or maybe they're at a broker dealer and they're thinking about going RIA, but they don't know everything that's going to be involved with it. Like how much, do they want to really launch their own? Do they want to just be embedded in somebody else's because of the compliance component? How should they be thinking about that? For somebody who doesn't really know, they don't really know what their broker dealer's been doing for them. Like they don't know other than they know what they've been having to submit past compliance. What should they be thinking about for those people looking to make that transition?
Yeah, well, that's a really good angle to take on that. I think we get that a lot. We do a lot of initial registration, and I do get a lot of random questions from just connections of people that are almost exactly what you said. I mean, where they just go, hey, when should I do this? Or is that right for me? Or whatever. Unfortunately, the answer is always whenever they figure it out. But I think it's never too early to at least explore your options, right? Like it, and again, I think with financial advisors, I was very fortunate to work at an independent broker dealer for a long time. And at that independent broker dealer, there were not a lot of advisors where they started there. They always started somewhere else. And as an independent broker dealer, it was nice to say, okay, well, you started somewhere, realized, hey, there's probably a better way to do this, and then ended up at this independent place. So whether you're at a different independent shop or a captive place or whatever, or wirehouse, at least they had made that, analysis at some point and then made a transition. So I was used to working with those kind of advisors. But even those advisors, I don't know how many, sure they made informed decisions, but I don't know exactly where their priorities were, what drove each one to make those decisions. But in the RIA space, what I find interesting is when I did that job, I actually worked a lot with hybrid advisors. So those were advisors, which commonly in the industry, people still mess up that term. That is not a dual registrant. So the entity is not a broker dealer and an RIA. It's an RIA that also has registered reps of a broker dealer. And so a lot of those firms, some of these bigger independent shops too, they have a corporate RIA. So you're kind of already 1 foot towards the RIA. You're already part of an RIA. It's not yours, but it's a corporate one. So you're already kind of there because you have to be an IAR of the corporate RIA. But in that hybrid scenario, I got to watch that get rolled out. So I saw a lot of advisors jump at the opportunity to have their own RIA and to charge AUM fees and do things like they want. Whereas other ones I actually saw come back to the corporate RIA because they realized they miscalculated. And some of that was based on compliance, right? So it's one thing to say, hey, you could service your clients the same way, keep more of your money, do all your own trading models, manage AUM however you want, do financial planning in the way that you want it instead of running it through a broker dealer to tell you what you can and can't charge or how to deliver a plan or whatever. But then as soon as the SEC knocks on your door and they go, whoa, why are you here? And you're like, well, because you're an RIA and you registered with us. They were like, hey, the broker dealer never told me that. And they came running back to be part of the corporate RIA because of the risk. But at the same time, plenty of advisors embraced that and said, okay, well, we know the rules, so we'll just follow the rules. And it does mean more compliance. And that's kind of where our company comes in. Because then they didn't realize, oh, we need to name a CCO, we need to do an annual review, we need to have our own policies and procedures. And even hybrids now call us, and we have plenty of hybrid clients that they know that the broker dealer does a lot for them, but they need to know, where does the broker dealer stop and where does their compliance kick in on the RIA side. So it's kind of nice to figure that puzzle out. But I think at any point, I mean, I get calls once a week from somebody at a wirehouse that says, hey, what do I need to do to go RIA, and should I do it? I have other people that are already with a hybrid saying, I'd like to start my own. I have other ones that say, they're in all walks of life everywhere trying to figure out what to do, right? But it's never too early to kick the tires, because I think we understand that these people don't live in compliance. Most advisors dabble, and they know enough to know, because, oh yeah, I got an alert. It says I have to fill out the CE thing once a year, right? Or I know I need to report outside business activities or personal trading or whatever. So they get it because they have to do some of it. But when it comes down to registration, most people don't understand the basics, or they, especially coming from a wirehouse or broker dealer, you have a third set of rules people don't usually think of. So you have the firm's rules that are risk-based on top of maybe the FINRA regulations. So then they go, okay, oh man, there's like 100 things I'd have to do on my own. And you're like, well, actually, if you're SEC registered, there might only be 10 of those things. And then how you do them is totally different, because it's more of a spirit of the rule as opposed to specific rules you got to follow. So it depends. And I think that's what is super fun for me. So I get to talk about every individual situation. It's not a one size fits all cookie cutter kind of thing. But yeah, so anybody should start at any time that they even get an inkling. And some people, we have that conversation and they go, you know what, I think it makes most sense where I'm at now, and I'm fine. And other people go, oh, you know what, that actually, tell me more. Go down that road, right? So it's totally different. It depends on how you serve your clients and what you want, what you want to do with the future of your firm.
Yeah, no, that's great. And I think just, for those of you listening, Kent's contact info is going to be available. So go send him your random question. But
hey, that's fine.
Yeah. But for people that you've kind of shepherded through this process, I imagine people, at least it's been, kind of my experience in the background in some of these situations, seeing that the compliance is the kind of boogeyman in the room for them. And when they actually go through the whole process, like, it's really not as bad as they think it is, or like there's a lot more restriction that was imposed on them in their previous situation that, was at the firm level. Like, it was not actually a requirement. It was just something that the firm was pushing. In terms of stumbling blocks for people, have there been common stumbling blocks that you've experienced as you've worked with firms going through this process, of things that, maybe are shocking to them or, surprising when it comes to going independent? Just a slight interruption in this conversation. I wanted to bring to your attention two things that are important for you to know. So we're always at the mercy of social media algorithms. So if you can subscribe to the show, that would mean a lot to me. Even more to me if you can leave a rating and let me know what you think about it. But we have a new newsletter that's coming out. It's going to be very active in 2025. That is specifically around tax issues that I'm seeing advisors face in their own practices, changes in legislations, and the pieces that I think are critically important for you to stay ahead of as an advisor with the new administration. So nearby, wherever you're interacting with this, will be the link of how to sign up for our newsletter. Also nearby will be the link to my LinkedIn, which is the best way to get in touch with me, learn more about what we're doing for advisors in the tax strategy and compliance work that we do, and also to get access to the various tools and interviews and things that I do, specifically designed to help you improve your practice, improve your own tax situation, etc. So let's get back to the episode, and thanks for tuning in.
I wouldn't say there's specific stuff. I mean, there's always, hurdles that you have to come across, but it's very straightforward. It's almost an open book test on a lot of these things. And I think the thing that tends to trip people up in any independent scenario, even if you're not an RIA, if you're going from a captive broker dealer to an independent broker dealer, I've seen the same kind of reaction where, when you're truly independent, and if you're starting your own RIA and you're only a shop of maybe a handful of people, I mean, we have clients that are literally a one-person RIA. They can go down to that size. We have some that are 100 employees, so they're all over the place. I think they get a paralysis when they think of, it's such an open world and they literally have lots of possibilities. They don't know what they, here's all the things you can do, but they don't know what they should do, right? So sometimes they go through a little bit of a culture shock when they, what I used to say, the best part about being independent is that you're independent and you do what you want. The worst part about being independent is you're independent. There's nobody that's going to tell you what you need to do. They'll tell you, here's your guidelines, but no one's going to come through and tell you, oh, here's a good marketing strategy. It's you do your own marketing strategy, or you hire somebody to help you do marketing. Nobody's going to say, oh, you should do more financial planning, or your clients would benefit if you partner with an insurance company to offer them more insurance, or do more estate planning, or you should have more aggressive models and this kind of balance of trade. Like there's nobody to do that. So it's totally up to you. And so if you already have that kind of vision, then surely you can supplement that with the service providers and other staff. But I think sometimes that main vision gets people thrown off. So just because you can doesn't mean you should. So we go, oh, I really want to do this, and then they do it, and then they realize, oh, it's not that great. But like structurally, there's really not that many pitfalls when it comes to it. Although I probably can come up with a few, but I think more existing RIAs have problems that I see more commonly, because almost every existing RIA, we kind of go through this checklist of making sure they're all up to par. And obviously, if they're an SEC firm, we have to go through an annual review process. So when we look at their entire program, I see the same kind of pitfalls. And you can see that throughout the industry just from enforcement actions, that everyone kind of goes through the same cycle. But no, new ones, I think we try to do a really good job of setting the table for them. And I know there's a lot of RIA compliance firms that do the same thing, where they really try to walk you through and set your expectations, because, a lot of these people don't know what they don't know, right? Advisors especially, and they don't speak regulations. They don't know what the regulators are even talking about in some cases. So we do have to do a decent amount of preparation and handholding and support through that. But that's, like I said, that's kind of part of what we like to do. But nothing really gets them as much as just the, figuring out what you want to do, which could be the same in any walk of life, right? How do you want to run your business? You're a business owner, right? How do you want to run your business? And they go, I don't know.
Once that door is open. So for the existing firms and some of the, going through the checklist and enforcement actions, can you speak to that a little bit? Like any trends or things that you've been seeing with like enforcement actions or, emphasis? We're recording this, middle of 2025, but anything that you've been seeing on, on that front of things, any changes with the new administration, anything like that?
Well, the new administration has put out a couple just very blanketed regulation freezes, but there are things already in motion that they haven't necessarily undone. So we get that question a lot of like, hey, is this thing still coming down the road for us? But no, there's a lot of, unfortunately, it's been very similar the last couple of years, but the SEC, I think, does a really good job of putting out their exam priorities, and then they stick to them. So they try to do that. And if you actually listen to a decent amount of what the commissioners and other staff say, I heard someone a couple of weeks ago actually refer to one of their risk alerts they put out. They said, hey, this is a labor of love. Like, we don't want to rake people over the coals. Like, we're trying to make this an open book test.
Yeah, right? Let us help you.
Right. Yeah. And it's funny because you get people that are very anti-regulation in this industry. And I understand. I mean, nobody's like, hooray, regulations. Like, please limit what I do. But at the same point, they're not as crazy as you might think once you look at the practicality of them. And when you think of some of these regulatory bodies, they're completely reactionary. They don't just wake up in the morning and go, hey, what's a new rule that'll make everybody mad? Like they go, hey, clients have been, disadvantaged by certain things. What do we do to make up for that? Or, there's been fraud and people had their money stolen. So how do we prevent that? Right. So, so lately we've seen a lot of scrutiny over off-channel communication. That's been in the news for probably 5 years or more now. But one of the things I like about those conversations with my clients now and with anyone is that your clients are pushing you onto the off-channel communications. So 5 years ago, you could say, our policy is we don't text with clients. Well, guess what? Today, your clients are texting you, right? Yeah. And they'll get mad because they might say, hey, we texted you and you never answered us back. And they go, oh, well, we weren't supposed to. Or, hey, you're texting a number that doesn't even get text messaging or whatever. Yeah. So you're, advisors are now forced to upgrade and take into consideration what's going on because you can't avoid it. It's already here, right? So So that's something we see very commonly still. I feel like for the last 3 years, all I talk about is, are you capturing your text messages? Are you capturing your instant messaging? Are you capturing your Zoom calls? Because now all your clients want to meet on Zoom or on Teams or whatever. And the archivers can do it. They've all upgraded those. Obviously we see a lot of just confusion on registration issues, but those are pretty easy and those aren't as common. I mean, we see them a decent amount. But I'm trying to think of some of the other bigger ones. Mainly, and the whole crux of being compliant, at least in the RIA space, is, are you doing what you said you're going to do? So more often than not, I think the number one thing that we see that's off has to be inconsistency with documentation. What we do is we walk clients through that and say, does this match reality? Do we need to change reality, or do we need to change a disclosure, or do we need to change a description? And it can be as simple as your services. I mean, every prospect we talk to, if somebody reaches out and said, hey, we want to talk to you, I can pull their ADVs, they're all public, and I go look at their website and I go, okay, well, it says you offer investment management, but on your website it says you do wealth management. But then you gave me a contract that says wealth advisory. I'm like, what do all those mean? Like, you didn't even just define the same terms, right? Let alone getting into the minutia. So just making sure you trust but verify and make sure everything's consistent. And I think ultimately that's probably 80% of the game right there.
Yeah, no, that's a really good point. And it's funny that you say that, because I'll have, because something that I'll do is I'll pull people's ADVs before they talk to me, because I'll be like, all right, well, let me see what's out there.
Being sneaky.
I'll do it. I'll see like what kind of AUM we're looking at, like where, like who's listed on here, like what's going on with this. And then when I go into the conversations, sometimes like they'll tell me things and I'm like, that doesn't agree to what's on the ADV. And so it's one of those things where it's like,
but that's the point we try to make. One is, congratulations for wearing a compliance hat while doing that, because that's literally what we do, and that's what the examiners can do. I mean, when they call to schedule your exam, they've already looked at that stuff. You've already submitted ADVs, and they're public, and you have a website out there, so it's pretty easy to tell what's what, right, or what's not. Yeah. You can tell if it's misaligned. It doesn't mean you know which one is correct, but if you have two different answers, they both can't be the same. So that's where you got to start.
Yeah, exactly. So for people that are interested in learning more about the work that you do, Kent, what's the best way for them to kind of get into your world?
Just check out our website. It's just reliantcompliance.com. We have a form submission. That's the best way to get into our scenario, and we try to reach out pretty quickly and have introductory calls. There are some firms that don't fit with what we do, or we don't fit with what they do. Like, for example, we're not private fund specialists. We do work with some firms that have private funds. Ultimately, we try not to be honest. And then there's a few other kinds of scenarios depending on the deal. But for the most part, we help really with the fundamentals of what we'd consider compliance in the RIA space. Or if you're trying to create an RIA, right? So we get plenty of those. And then again, we also specialize in hybrids, because there are a lot of hybrids out there. It was really exciting to kind of see that wave take effect in kind of 2006 to 2008 is when those became pretty popular. And, I think the broker dealers also realized, hey, we don't want to lose all of our reps to the RIA space. So they're very quick to say, no, please stay. Halfway. We'll give you a way to do this. But I think those, for me personally, are my favorite to deal with, and I still have plenty from the old independent broker dealer I worked at, because it was just really nice to know that, like, hey, I speak the language of your broker dealer, and I also can translate where they stop. And that was frustrating for me working there. Is, they'd say, oh, I have questions on the RA stuff, and I'd say, hey, I work for the broker dealer. I can't really advise you on what else to do on the other side, right? So I mean, anybody's welcome to reach out. We're happy to have conversations. We're always happy to make connections anywhere we can and help anybody that needs it. We don't want to gatekeep compliance. We also don't want to keep somebody from making an uninformed decision if they are looking into certain spaces. And sometimes that means they feel like they're fine where they're at once they do the due diligence, right?
Yeah, absolutely. So for those of you listening, we'll post the links for the Reliant Compliance website. I'll also put Kent's LinkedIn so you can connect with him there if you want to see posts and stuff. And we'll get those posted in the show notes below. So any other final thoughts you have, Kent, before we sign off?
I don't think so, other than thanks for having me. And yeah, anytime I can reach a bigger audience of more financial advisors, I'm always happy to help. We try to put a face to compliance and let people know that we're people too. We're not a bunch of
Yeah.
angry librarians who are trying to, we're not the people that work at the BMV that are always, rejecting your applications for things. We're trying to help people navigate. And I think it's interesting. There are firms out there that really appreciate what we do, and obviously we're happy about that. But I think more firms are realizing like compliance can really be a strength for your firm, right? And it doesn't have to be adversarial, and we can make things very business friendly and pragmatic for you. And once we can translate, I think people get this misconception of what compliance really means in their head. And then if we can dispel some of that, they go, oh, well, that's actually not that bad. And we go, yeah, that's what we've been telling you. So we're always happy to help wherever, even if that's not a client, we're always willing to answer questions and help people where we can.
Yeah, that's great. Because I think even like with the comment that you had with the off-channel communication, right? Like if I were a firm owner, I wouldn't want anybody having off-channel communication, because like, how are we capturing this back in the CRM so that other team members can work on this?
Right. Yeah,
it's like that's just impractical from a business perspective, and I think for a lot of those kinds of things, it's like, yeah, you don't want to have things be inconsistent across what's publicly available in your marketing, because then it just doesn't look buttoned up. Like if a client's really checking you out, or
and it's not just business reputation, it's customer service, right? Especially if you have multiple people working with your clients. You don't want to say, oh, well, you don't want to call a client and say, hey, I'm waiting for whatever. And they go, oh, well, I texted that to Steve, and how did you not know that, right?
Yeah,
all got to be in the same place.
Exactly. Yeah. So for those of you listening, thanks for joining us on the show. This was the Financial Advisors Want to Know podcast.